Welcome back. Now, the Namibia Financial Institutions Supervisory Authority, NAMFISA, has officially released its quarterly statistical bulletin for the second quarter of 2025, offering a comprehensive overview of the performance, the resilience, and the regulatory compliance of Namibia's non-banking financial institutions. Now, this important publication, launched in September 2025, serves as a key instrument in promoting transparency, accountability, and public awareness within the financial sector. The report provides valuable insight into the trends shaping the non-banking financial industry, including the performance of pension funds. Well, joining us this morning, we are now speaking to Bartholomeus Katota, who is the Manager for Financial Stability at NAMFISA, to talk to us about the report and so much more. Very good morning, Mr. Katota, and thank you so much for making time to join us this morning.
Yes, good morning, and it's always a pleasure to be back again.
All right. First things first, this quarterly bulletin is a key publication for NAMFISA. Can you perhaps just start off by telling us a bit more about it and why it's so important to release this information to the public?
Yes, so in terms of the NAMFISA mandate, NAMFISA exists to protect consumers, to ensure financial stability, and also financial crime. So this is one of the ways in which NAMFISA engage our stakeholders. In this case, we are talking about consumers. We need to keep them updated of the industry developments, and also our stakeholders, your policymakers, and the general public at large. We need to inform them about the new developments, new entities or new companies which were registered, companies which were deregistered, and how the investments are performing of the different industries.
Yeah. When we talk about non-banking financial institutions, who exactly does this include and which types of organizations fall under this umbrella?
Yeah, so in total, NAMFISA regulates more than 1,000 companies, and over 80% of that is your microlenders. So microlenders is the biggest sector in terms of number of companies. And then pension fund is one sector. We also have pension fund, which is the biggest in terms of assets. And then you have your collective investments. You have your collective investment is the same as unit trust. And then we have the medical aid. And then we have the friendly society. And then we have insurance. Under insurance, we have your long-term insurance and short-term insurance.
Yeah.
So those are the key sectors in terms of the NAMFISA scope.
Amazing. Now, looking at the second quarter of 2025, where did you see the most significant growth or notable trends within the sector?
Yes, for the sector, in terms of the size of the industry, maybe I should first contextualize in terms of assets. 90% of the non-banking sector assets predominantly comes from three sectors. That is your pension fund, your long-term insurance, and your collective investment schemes. So in this quarter, given that the growth of the industry was just about 500 billion in terms of assets, so obviously growth was predominantly driven by the top three, the movers and shakers of the industry. They contributed to that growth in terms of how the investments performed during the current quarter ended.
Yeah.
Yeah.
All right. Now, for everyday consumer, why should they pay attention to this performance? How does it affect them directly?
So the effect for the consumer is actually, it's a peace of mind. They need to sort of appreciate the developments in terms of the financials. When companies are growing, it means it's good news. It gives them peace of mind, financial security, knowing that one day if you wake up and you want to go to pay your medical bills, the medical aids are able to honor the obligations. You can pay if you want to claim your insurance. So the growth actually is a positive signal for the ordinary consumer. And at the same time, the supervisory development is another aspect which consumers also need to know, that when we publish about companies which were registered, those are the companies which you ought to do business with because you are protected. Yeah. Deregistered companies, it means as a consumer you must discontinue doing business with them. So I think that those are the key takeaways for an ordinary consumer.
Okay. Yeah. Now, NAMFISA definitely has a critical role when it comes to keeping institutions accountable. How do you ensure that organizations remain compliant and operate transparently?
Yeah, so in terms of the NAMFISA Act, we are empowered to do what is called supervision and regulation. So on a quarterly basis, there are two functions that the colleagues do. In the prudential, we have what is called off-site surveillance, and on-site surveillance. What that means is we analyze the performance on a continuous basis of these companies, and then once we have now done the assessments in line with our mandate of consumer protection, financial soundness, and so on, then we profile. We then have what is called a ladder of intervention. That is just to now put this company on a risk scale from 1 to 5. So in this quarter, we saw that over 90% of companies that we regulate are low risk. It means they are doing very well in terms of compliance to the NAMFISA laws. Less than 10% were sort of caught in the red because of basic compliance issues like failure to submit returns, failure to submit their levies. But the majority of those companies, 90% of those companies, are your microlenders. So in terms of impact on the overall system is not so significant. So that's how we sort of assess the compliance aspect. We use the ladder of intervention.
All right. Now we're in October, and October is basically known by NAMFISA as Consumer Protection Month. What are some of the key highlights or outcomes for consumer protection during this period?
Yeah, so NAMFISA has a department of consumer complaints. In that department, we are open to receive public complaints. So during the quarter under review, we received just over 100 complaints, and over almost 80% of those cases were resolved. And then that resulted into over 300,000, just about 300,000 money being awarded back to the consumers for whose cases were the complainants now, these consumers who came through to report. So they got that money awarded back to them, over 300,000. And we take pride in that because that is why we exist, to ensure that consumers are treated fairly and protected. So
if someone were to read the report for the first time, what would you say are some of the most important things or lessons that they should look out for?
So basically, in terms of this report, the key takeaway is actually to have an appreciation of the NAMFISA mandate. Like I indicated earlier, the NAMFISA mandate speaks to financial stability, making sure that the companies we regulate are financially healthy. So as a person or as an investor or as a consumer, you need to understand which companies are doing well or which sector is doing well financially. That is financial soundness. And then the consumer protection. So we have updates in terms of the developments, in terms of what new laws are being issued, which companies are being registered, which companies are deregistered. So those are some of the key things. Understanding the trends, how the financial industries are doing they doing good or bad? And also having an appreciation of which companies are legally registered and doing business with NAMFISA.
Well, Mr. Katota, is there anything else that you'd like to share with our viewers this morning?
Yes, in conclusion, I just wanted to inform the public that NAMFISA's doors are open, and we exist to ensure that the interests of all the stakeholders are taken care of. We have a consumer department where if a complainant wants to inquire or have more information or to have a conversation about this kind of publication, our doors are open. And on the website, we still have this full report that is published on the NAMFISA website.
Accessible to the entire public.
Yes.
All right.